Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York. I've been an accountant for over 20 years and I've been a CPA for over 10 years. In today's video, we are going to discuss what is a 1099, what is a 1099-K, what is a 1099-C, what it means for you for tax planning purposes, what to do if you receive a notice about a 1099-K that you received after you file your taxes, and how to incorporate it into your tax plan. And we're also going to go over the history of it and how the laws recently changed. So let's rock and roll. And by the way, before we do, please be sure to like, comment, and subscribe. And if you have any questions or any comments, leave them in the comment section below and I'll be sure to respond. I try to reply to every comment, which sometimes becomes time consuming, but what else am I going to do at night anyway, right? So the rule used to be if I paid an individual $600 or more, I had to issue them a 1099. This didn't apply if I paid it to a corporation or to an LLC, only to an individual. And it also used to be that if Uber, Lyft, PayPal, eBay, Cash App, Venmo, Zelle transferred or paid you more than $20,000, or a credit card company, by the way, paid you more than $20,000 as an individual or as a corporation or as an LLC, they would have to issue you a 1099-K. And what happened is the pandemic hit, the government gave away a ton of free money, and then they said, how are we going to pay for this? And they said, well, there's so much money that's not being taxed for people who earn more than $600 as a 1099, but don't have it reported to them, right? So a lot of people say there's no proof of it, it never happened, therefore I'm not going to include it on my taxes. Now, part of having a 1099-K is that means you're a sole proprietor, you're in business for yourself, and you should have expenses against it, meaning whether you sell $700 or $7,000 or $70,000 of a product on eBay, obviously that product costs you something, right? The cost of the materials to ship it costs you something. The accounting fees, which I happen to love because I'm an accountant, right, that you paid, should also be written off. So all that stuff should be a write-off against that income you collected. So we'll go a little further into that, but it's very simple. The rule used to be $600, and as an individual, I had to issue you a 1099, which would also be issued to the government. On the flip side, 20,000, the big players, eBay, PayPal, Uber, credit card companies had to issue you a 1099 as well, and you would pay tax on it that way. Now the rule is $600. So if you earn more than, or let me rephrase that, if you gross more than $600 on eBay in sales, you're going to receive a 1099-K, and that's going to be on your personal tax return in the form of a Schedule C, and you should have business expenses against it. And whatever you have left over in terms of profit, you should probably set aside 20 to 25% for federal and state taxes, unless, of course, you're in a state that does not have income tax. So what does this mean? This means that there's going to be a lot of people receiving 1099s and they don't know that it's coming. They don't know to look for it. They're going to forget to give it to their accountant. They're going to file their taxes 3 months later, 6 months later, they're going to receive a letter from the IRS, and this could also be you. And they're going to say, hey, we saw that you didn't report this $20,000 of additional income. And if you agree with it, here's the additional tax you owe. And if you don't agree with it, then please A, write a letter, and B, amend your tax return. So you have to take multifaceted steps. And the other issue with that is they give you a certain time frame to respond, and they will also give you 90 days to, I take that back, if you don't respond to them within that set time frame, then you'll receive a second letter in the mail saying, okay, you never replied. We're now assessing you in full. You owe this tax, and if you disagree, you now have 90 days to reply to the U.S. tax court. And that's another nightmare of itself. And there's another step you could take after that. But, once you go down that road, unless you don't have a lot of money and you can hire somebody to represent you for free, you're going to have issues and you're going to owe that tax unless you do an offer in compromise, which is another conversation for another day. So the bottom line is, even though you never received a 1099-K or a 1099-C before you should have been reporting whatever income you received from eBay. But not just that income, which is your sales, but also the expenses and then your net income. And that net income is what you should have been paying an additional tax on. And the flip side of that is if you had a loss, then you would have had that as a loss and you would have offset that against your other income, or you would have had that loss carried forward to the following year. And then when you have that income, it's offset. So this might sound like a big circular thing. I apologize. It's going to sound a little convoluted. I'm going to try my best to keep it simple, but at the end of the day, it's also really simple. So again, up until 2023, it used to be if you made $15,000 driving from Uber or grossed $15,000 from driving for Uber, you didn't receive a 1099. Now that it's 2023, for the government to make up for it in taxes, you're going to receive a 1099. So just be cautious and be cognizant of that. What does it mean in the grand scheme of things? Well, A, your tax preparation fees are going to go up because now you don't just have a W-2 or two, right? No pun intended. You don't have a few W-2s going onto your personal tax return. You now have a business return as a sole proprietor, and you're going to have expenses against that. And, our minimum fee for a Schedule C tax return is $450. Other accountants charge less. We just know what they entail. But that's part one. Part two is there's going to be a lot more notices going out, a lot more people forgetting about income that they have, and then they're going to be getting stuck with tax bills. If it's a substantial amount and you don't respond in time, then you're going to also have to consider doing an offer in compromise so you don't get stuck with a huge tax bill that you never should have had. And in effect, those letters that you're going to receive are audits, right? It's really an audit. They audit your tax return and they say, hey, we're showing W-2 income of $60,000 and we're showing 1099 income of $30,000. You missed the $30,000. Here's the additional tax on that $30,000. So you want to reply to that letter right away, and you want to amend your tax return. And you want to show, okay, fine, I sold $30,000 of widgets, $30,000 worth of clothes, $30,000 worth of comic books, whatever you sold there, less your expenses, right? And what were your expenses against selling clothes, right? Well, obviously you had to pay for the clothes. And then you had your auto that went into the clothes. Then you had the listing fees that went into selling the clothes. You have the postage to ship out the clothes. You have the auto miles to ship out the clothes. You have your cell phone bill or your home internet that has to be allocated towards that. So you definitely shouldn't be paying tax on $30,000 if you had other expenses associated with that business for you as a sole proprietor. The other thing I want to clarify is transfers on Venmo to you and to me as a friend are not taxable, right? A lot of people get that wrong. As long as it's not showing up as a taxable event and you're not clicking off that little button when you send money to your friend that it's for a business and they have that fee taken out. If you're just transferring it for lunch, the movies, for child support, whatever you want, that's not taxable. It's only items that are checked off as income that you'll receive that 1099 for. And why are they doing the 1099s again? From 600 down to, from 20,000 down to 600 to get more income, to get more governmental revenue. So the other issue is that the tax form that this income gets reported on, if you're a sole proprietor, is Schedule C, and it has the highest audit rate, which is between 2 to 4%, depending on the revenue. As multi-member LLC and as a corporation, your audit rate's more like 0.4% up to 2%, depending on revenue and how the tax return was prepared as well. A lot of it has to go with how you prepare a tax return. Another conversation for another day, though. So there's also going to be a lot of unseen consequences of this, meaning people are going to have all sorts of unseen expenses as well, right? The government thinks, hey, all these people aren't reporting that income. Well, now they're going to have all sorts of auto expenses. They're going to have all sorts of storage fees. They're going to want to allocate their home rent to it. They're going to want to allocate utilities. People are going to have all sorts of unintended consequences, meaning if you ever have a Uber driver who's a client, they all say, hey, I don't make any money from it based on the miles I drove. And as a matter of fact, it's a loss. And as a matter of fact, when you do the math and you see how much these Uber drivers do drive, it is probably a loss, just going off of the IRS's standard rules. It works out to be a loss, which then actually lowers the expected tax revenue. But again, another conversation for another day. So you're going to pay more in tax preparation fees. It's not like your accountant's just going to prepare a W-2. They're going to have to prepare a business return as well. Going off of what CNBC said, the new $600 rule. Under the new rule set forth by the IRS, if you receive more than $600 for the transaction of goods and services through third-party payment platforms, eBay, PayPal, Cash App, Venmo, Zelle, Uber, Lyft, the list goes on, credit card companies, you will receive a 1099-K reported for this. The one benefit of receiving a 1099-K is, at least in theory, depending on how you report it, it's not all subject to FICA or Social Security and Medicare tax, which is, I hate to say it, another conversation for another day. But if you are in business and you're actively conducting business, then I would suggest setting up a corporation, preferably an S corporation. This is what we recommend 99% of the time. Don't take this as tax advice, but I'm telling you, as what I recommend 99% of the time, and what I have for myself is an S corporation. Granted, I'm an accountant, so I have to have a PC, meaning a professional corporation in New York State, which is then taxed as an S corporation, but that's what we recommend 99% of the time for small businesses for a multitude of reasons that we're not going to go into. So they go on to say it's generally recommended that business owners and others who earn income that doesn't get taxed up front put away around 20%. Again, 20, 25, 30%, especially if it's subject to FICA. But don't forget, if you have expenses, you shouldn't be paying tax on it. And this rule was actually supposed to take effect in 2022, but on January 3rd of 2023, the Internal Revenue Service announced, so this is going back over a year ago or close to a year ago, announced that the delay in reporting thresholds for third-party settlement organizations set to take effect for the upcoming tax filing season, right? So they delayed it a year from 22 to 23. It's going to take effect. I can't emphasize it enough. If you prepare your tax return, you receive a letter after the fact, you need to contact the local accountant, go to a CPA, don't use some run-of-the-mill, quote, accountant, and also, well, frankly, if you did, you can just leave a comment below if you're watching this, and I'll give you the best of the input that I can give you. And, selfishly, as an accountant, as a CPA, I can tell you that this is going to result in accountants earning a lot more money. I mean, I can tell you that pretty much everything and anything Congress and the government has done in the last few years has just substantially helped accountants and CPAs, and I'm sure law firms as well. I'm not well versed in, all sorts of laws they've passed, not, in terms of the tax code I am, but in terms of, legal stuff that they've passed, that I don't know. But they've been very, I'm trying to look for the right word, but they've done good good stuff for accountants, even though, I personally disagree with, trying to word this delicately and stay out of trouble. But whatever, long story short is, any income that you collect throughout the year, if it goes into a bank account or even if you're keeping cash, you should report it. Go to an accountant. Hopefully you have a trusted advisor. Don't be afraid to shop around and go and speak to multiple accountants. And if you call them up and they say, hey, I got a letter and it's showing 30,000 of income, and they don't say, what expenses do you have against that 30,000, against that 20,000, against that additional income, don't hire them, right? Because you clearly had expenses and they should be deducted, and then whatever you're left with is what you will end up paying taxes on. That's it. It's pretty black and white. Hopefully this was helpful. If you feel like I missed anything out, let me know. But I feel like this is a black and white subject. Hopefully this helps you. And again, if you receive a notice, take care of it right away. If you're selling on eBay, if you're selling on PayPal, whatever it is, whether you're selling Pez dispensers or clothes or widgets, just print it out, bring it to your accountant, do your own homework, do your own due diligence. And if you have any questions, leave a comment below, and I hope you have a great rest of the day. Thanks.